Well, welcome to makeitrain.net. Thank you for joining us, folks. Today we have a fantastic topic for you. It's regarding Trump's tax returns. Now, we're not taking sides here, okay? We're not saying Trump's tax returns are good or they're bad or they're justified or they're ethical. We're not taking any sides here. What we're doing here is one thing and one thing only. It's describing you and giving you the information and hopefully helping you guys figure out how you too can possibly use these deductions, exemptions, and exceptions in your taxes, okay? Let's go by talking about a little bit of the history of his returns, right? Because history is important. We'll talk about then the earnings after the history, right? So you kind of understand the pattern, and then we're going to talk about the deductions. Pretty much from 2002 to 2017, Trump has paid almost zero or nil in federal tax returns. Federal, we're not talking state here, okay? So since 2005 through 2017, he paid about $70 million, although his earnings were in upwards of $450 or $60 million. So still a small amount of taxes, and was mainly due to an apprentice deal that he'd acquired. And the apprentice deal was $120 million per year for that season. And in multiple seasons, the apprentice series were very successful. And he continued on that streak. However, the apprentice demand just went down over the years, so his earnings also went down. In 2007, he paid even less than the previous years. He paid only $13 million, even though his earning due to apprentice kept going up that year. But he paid a lot less taxes. Guess what? In 2008, he paid zero taxes. I will show you how he did that so you guys understand. It was done legally. It was done through some loopholes that were in the law at the time. And then since 2011 through 14, he had also paid almost zero, or I would say 24 some dollars of taxes each year. So you learn a little bit about his history. Now you understand, the sequence of things and how the taxes somehow progressively declined, right? As in he paid 70 million, then 17 million, and then zero, and then $24. And then in 2016, he paid about $750 in taxes. $750 in taxes. So think about that for a second, right? There is a pattern here, there's a trend here. Point to be noted, after he became president, his earnings actually went up because a lot of his golf clubs and other entities, the earnings in those entities spiked, okay? Spiked. This is like 4 or 5 times, and I'll give you specific examples of which one of his properties, especially the Mar-a-Lago golf course, the Doral golf course. Those properties just kept, raking in a lot of money. The Trump Hotel in Washington D.C. on Pennsylvania Ave that he built also had significant earnings in the past 3 years. Okay, so Trump during the apprentice years made $450 million each year consecutively. His kids got paid about $500,000 each from his earnings, not including their own earnings. Okay, he made various other commercials on Cheetos, on Trump mattress, on drinks, on other commercials that he supported. On speaking engagements, he got paid $300,000 for a speaking engagement, about $700,000 on a real estate seminar on how to be a real estate mogul like Trump. And that's all fine, right? That's his earnings. That's how he earns and makes money. So during that time, he also, would, file in his return $70,000 for his own hair, right? For his own haircut, and then $94,000 for his daughter's haircut, and then $200,000 for photographers, and that was also part of the earning, part of the $450 million a year package that he was getting from The Apprentice and many other engagements that he was involved in. During that time, Donald Trump also made about $73 million from hotels abroad. Okay, the Trump brand had put a lot of hotels in Abu Dhabi, in Dubai, in UAE, in the Philippines. I think there was a deal in Azerbaijan that he did. So now that we know the background and the history of Trump's returns, let's talk about the deductions, okay? Because that's what this whole gist is about, is how did he do the deductions, right? How was he able to claim exemption, deductions, exceptions in his tax returns that he was then able to claim and make all the money that he's making, and people are upset about it because he saved a lot of money in taxes. He has paid a lot less in taxes than any average earning American with an income of $50,000. So we're going to talk about the deductions he was able to gather from these tax returns. So around 2009, he was able to file a deduction for $700 million. $700 million, okay? It was a hotel in Atlantic City that he essentially devalued. He was in a partnership with another brand. He had taken some loans from the banks, and he basically said, and he told the SEC that this partnership is no good. It was worthless. It didn't allow him to gain anything from the partnership. So he was willing to cancel the deal and take his losses and so on and so forth. It was purely a business / real estate asset class, I would call it, because it was a casino in Atlantic City. And that's totally legal, by the way. This was a complete and legal deduction. A business doesn't work, you have a partnership, you devalue, you call the partnership worthless, you inform the SEC, you take the losses. However, the reason there's an audit on that special and specific case, it's very interesting because there's a clause in the IRS rules log, right, which says that if you have 5% or more stake still in that asset, then you are liable for over $100 million in taxes, depending on the deal. So in this case, the audit against Trump is about those $100 million that he could possibly owe if he loses that audit, right? With him claiming $700 million in credit and devaluating his asset. Okay. So the next move that Trump made right before he became president, which was very interesting to me, is he bought a post office right here on Pennsylvania Ave in Washington, D.C. And that hotel was made on an old post office. And it was the Obama administration that actually okayed that deal. And also he applied for a credit of $72 million in the federal tax returns, and also a $21 million credit for taking this old location of this post office on a premier location in Pennsylvania Ave and then turning into a nice and beautiful hotel. Since then, that hotel has done really well, especially in the past 2-3 years since Trump has become president. The earnings, the lunches, dinners, stays, hotels, memberships, everything has gone up since Trump has been president for that hotel. But the key point to remember here is, right, that he took all the deductions for that hotel for refurbishing it. So it was a good deal for him, pound for pound, right? So here's what's really interesting, right? We're talking about deductions right now, right? His deductions, even though his earnings from the hotels and everything else kept going up after he became president, his deductions and his administrative cost kept going higher. Now you would imagine, like, how can it go higher? You're running a golf course, you're running a hotel, same admin, same staff. Maybe in COVID it's even less. However, when he filed his tax returns, he deducted a lot more administrative expenses. And the general and administrative expenses, both of them are a separate line item, okay? And you don't have to itemize them. So you don't have to really say that these expenses, these general expenses, administrative expenses went toward food or a salary of a small employee or maintaining the brand name or getting a haircut or paying Ivanka Trump, $94,000 for her haircut, whatever that may be. You have to also remember, Trump was able to do all these things also because Trump has established himself as a brand. And not to say that you or anyone else cannot also call themselves a public figure or a brand. If you have enough following, if you have enough, business and so on and so forth, you totally can also be a brand. If you get into any marketing, if you're even a Instagram influencer or a YouTuber, you can totally call yourself a brand, and you too can also deduct those expenses, depending on how your business is structured. We're not providing any financial advice here. We're just telling you how it was done in Trump's era and how you too can benefit from it. If you want to learn more about this, you can certainly visit makeitrain.net and tax consulting, and you can consult with our advisors that we have on our staff who can also help you understand how these taxes are done and why whatever was done, the hotel depreciation, the Atlantic City casino depreciation, is all legal. Folks, you have to understand, Trump has not tried to do anything illegal. He did break some rules, but he didn't break the law. he deducted general expenses, administrative expenses, wherever it applied to his business. He had a legitimate business, right? He built a hotel and the hotel failed. If you start 10 businesses and 3 of them fail, who's to say that you're a bad businessman or that you deducted the wrong expenses? The IRS allows you to deduct certain expenses if you have a business, if you're creating jobs, if you're increasing the economy, right? You get certain incentives. Look at Tesla, right? Tesla got a lot of tax breaks from the state and federal for opening an office or a factory, a gigafactory in Nevada, right? And in California, and now they're opening a factory in Houston. So they're going to get all kinds of tax breaks. Why? Because they're creating jobs. They're stimulating the economy. They are increasing the wealth of the country. They're a major player. So all that to say is that what was done, right, the deductions that we talked about, those are all legal. They're completely legal. So now, one last thing that Trump also invested $160 million in the Doral golf course during this time in the past few years. But guess what? He claimed $250 million, around $200 million in deductions and losses on that course. You might ask how? How can he do that? Well, devaluation of the property. Again, the property is aging, right? You have to fix the golf course. You have to paint the walls. You have to fix the rooms. You have these, remember we talked about general and administrative cost. He included all those costs and he racked up the bill and massively devalued the asset to over $200 million. And so even though he invested $160 million, he got more than that back in his tax returns. So keep that in mind. It's a very critical point. Now, while Trump was building all these assets, he was also taking loans. So now the big topic that Trump owes $125 million or so dollars in taxes, which are due in the next 3 years. He got actually over $700 million of credit from the IRS because of the claims he has made, right? So he has a lot of credit from the IRS for refurbishing certain properties, for creating jobs, for creating businesses. Some businesses flourished, some businesses failed, and he has all these earnings. So you can understand why he's getting those breaks, because he definitely brings in a lot more than he's losing. But the fact that he's showing more losses consistently in the past 5, 6, 7 years is causing a big concern now in the community, that how come this business is consistently failing, given that he also has some bankruptcies in his records previously. So now Trump has also overall together taken $287 million, okay, $287 million of loans. And it's totally legal to get a loan, okay? I get loans, you can get loans, you can give your brother, your sister, your daughter, someone a loan, or someone can give you a loan, right? If loans didn't exist, people won't be able to do any business, right? Banks give out loans, financial institutions give out loans. So Trump has taken $287 million worth of loans, and he hasn't paid them back. So there is a controversy now. What happens if he can't pay them back? And in Trump's defense, he says, you know what? $287 million is a very small amount of money compared to all the money that I make, right? So here's a point, you can deduct, you can postpone things, you can defer taxes, you can do all these things if you have certain amount of earnings. And those are allotted, unfortunately, to the wealthy, but it can also be used by people who have a regular business. You could have a clinic, you could have a pet store, you could have a pet clinic, whatever you want. That's a business. It has its own deductions. And again, if you want to learn about that, please visit makeitrain.net, and the link is below, and click on tax consulting so you can find out what you can really do with the business that you have. You don't have to be a big brand. You can be a small brand. You can be, like I said, you can be an influencer. You can be a YouTuber. You have the right to deduct certain things in your tax returns as part of the IRS policies. We don't make the policies. We're just giving you the information so you guys can also leverage those policies, right? So I hope you guys learned something from this video. My point of sharing all these history of his earnings, his deductions, his history of paying taxes is so you guys can see a pattern. There is a flow, there's a pattern in this that you guys might appreciate how clever it was, how it was done. But a lot of it is, as much as I've read, and even aside from the audit he's facing, is all legal. It was all done by, the lawyers and the attorneys that he's hired, some very competent people who saw the loopholes, who saw the devaluation of assets, who saw the tax benefits for historic buildings, who saw, just to give you an example, like if his daughter is a consultant to his business, which she is right now in White House, and she was before, she was getting paid over $500,000 in salaries, and that's totally legal. If you have a business and you have a partner or a daughter or a sister or a dad or whomever, you certainly can pay salaries as a consultant to your kids, okay? To your kids or to your siblings or to your dad or anybody in your family or just a friend. Your friend can give you a loan, you can give your friend a loan, and you can deduct taxes that way as well. Again, these are all tactics, very simple tactics at that, that if done carefully can certainly save you some money in taxes, or at least defer the loans that you have. The goal here is to minimize the different levels of tax brackets you're in, right? Because if you minimize that, then you can maximize your returns and you can get to the wealth path faster. And I hope you guys enjoyed this. If you did, press like, press subscribe, click the notification button, so if you produce new videos, you guys can have that. I really appreciate you guys. You guys tell me, leave a comment below. You guys tell me, do you think it's ethical not to pay taxes? Do you think it's unethical to not pay taxes? Do you think it's ethical to pay lower than everybody else? It's really your call. We want to hear from you. We want to find out, what do you guys think? Should we even judge him? Because he's a businessman, he's trying to maximize his profits, right? So what's wrong with that, right? So let's discuss that. Let's get a conversation going. Drop us a line. Check it out on makeItRain.net, okay? Thank you.